Welcome back to the show. Today, I'm sitting down with a trader who has spent over 20 years navigating the volatility of the Forex markets. We're moving past the charts and the indicators today to talk about what actually happens between the ears. You've seen it all, the tech bubbles, the flash crashes, and the evolution of retail trading. But more importantly, you've mastered the discipline required to treat this like a business rather than a casino. To start us off, after 20 years in the game, if you could go back and speak to your younger self on day one, what is the one psychological hurdle you'd tell them is more important than any technical strategy?
If I had the chance to say one thing, it would be this. Believe in yourself, set your goals high, and understand that it's all a numbers game. You could be down $1,000 and 2 hours later up $50,000. That's the nature of this business. The upside is unlimited. Your results are driven by your attitude toward trading. If you lose $1K and let it affect you emotionally, you're only holding yourself back. But if you treat it as just a number, a data point, then you stay in control. You follow your plan, and the next few trades could easily recover that loss and put you ahead. That shift in mindset is everything. A single loss isn't failure. It's part of the process. When you start thinking in probabilities instead of emotions, you begin to operate like a professional.
That is a powerful mindset shift. You're touching on the law of large numbers, the idea that a single loss is just a statistical data point, not a personal failure. It sounds like you're describing a level of emotional detachment that most traders spend a lifetime trying to achieve. Let's dig a bit deeper into that business perspective. I love that. Treating it like a business where the losses are just overhead and the wins are revenue. But we know that for a lot of traders, especially those aiming for institutional challenges like the FTMO, that $1,000 loss doesn't feel like just a number. It feels like a threat to their dream. You've mentored many people through these high-stakes challenges. When you see a student staring at a drawdown, and you can see that gambler's panic starting to creep into their eyes, how do you coach them to flip that switch? How do you teach someone to actually believe the sky is the limit when they are currently staring at a red screen?
You mentioned staring at a red screen. Your first move should be to get out as quickly as possible. Learning to close losing trades is a skill, and like any skill, it takes time to develop. Most traders struggle with letting go, but that's the turning point. Once you start cutting losses and holding on to your winners, everything changes. You begin to build momentum, and once you feel that shift, there's no going back. You start to trust that by exiting bad trades early and letting good ones run, you're finally keeping more of your money. That's a masterclass in professional discipline. It exposes the loss aversion trap that keeps most retail traders stuck in frustration. At the end of the day, it comes down to one thing. Are you protecting your ego, or are you protecting your capital?
That's a profound insight. It sounds like you're saying that the real edge isn't found in a chart pattern, but in the audacity to be wrong quickly. Most people want to be right more than they want to be profitable. But you are teaching them that the exit button on a losing trade is actually their most powerful tool for growth. Once a trader masters that, once they stop fighting the market and start riding the momentum of their winners, the game changes. I want to pivot to the find your edge philosophy. You've mentioned that once you experience that momentum, you can't go back. For the listeners who are currently stuck in that break-even or losing phase, what is the first step to building that momentum? Is it about changing the strategy on the screen, or is it a complete overhaul of their daily routine and identity outside of trading hours?
You might already have a solid strategy. You're just executing it poorly. Before you even think about switching strategies, go deeper. Log at least 100 trades and analyze where you truly stand. Break your strategy down. Every system has strengths and weaknesses, and you need to understand both. Your daily routine matters more than you think. Distractions at work or at home, your level of focus, even how you reward yourself, all of it impacts your performance. Trading should make you feel engaged and alive, not drained. And here's something critical. Pay yourself. Withdraw your profits and actually use them. Too many traders keep pushing for one more win, only to give it all back. That's the harsh reality. This is where many fall into the gambler's ruin. The moment a disciplined trader turns into a chaser, making your profits real by withdrawing and rewarding yourself isn't just smart, it rewires your mindset and reinforces disciplined behavior.
I think that's a vital point that doesn't get talked about enough. If the money stays on the screen, it stays a video game. But once you withdraw it and use it to better your life or your family's life, your brain finally understands why it's doing the hard work of discipline. You're essentially training your brain to value the win more than the rush of the trade. I want to look at the pro side of this. You're currently developing FX Playbook Pro, an analytics tool for traders. Given what you just said about breaking down a strategy and logging 100 trades to find the weaknesses, how did your 20 years of experience influence the way you're building this tool? Are you designing it to be a mirror that shows traders the ugly truths about their habits, like the ones who refuse to withdraw or the ones who hold losers too long?
I wanted to find a way to log every trade and compare it to my results. I truly believe this is the right path for any professional trader. When you track 100 or 200 trades, it becomes a mirror. It shows you exactly who you are as a trader. It's all in the numbers, and numbers don't lie. The real question is, are you ready to face yourself? That's why I'm working on a free app designed to help aspiring traders do exactly that. When I first started 20 years ago, I didn't have that opportunity, and now I do. And every trader should be in position to have this opportunity.
That's a heavy question to leave our listeners with. Are you ready to face yourself? Because when you strip away the bad luck and the market manipulation excuses, all that's left is the data in your playbook. You've mentioned you're working on this as a free app for aspiring traders. That feels like a real mission. Providing the mirror before they lose their shirts. Why is the tribe aspect so important to you? Trading is often called the loneliest profession in the world. Do you believe a trader can truly reach their peak potential in isolation? Or is there something about the community and the founder mindset that accelerates that growth?
I want to connect with traders, build a strong community, and share my experience. Trading can be a lonely game, and getting out there to connect with others makes a real difference. If I can help traders find their own edge, I'll consider that mission accomplished. You can succeed on your own, but doing it within a community of like-minded people can fast-track your growth and keep you moving forward.
We've talked about the discipline and the community, but I want to get tactical for a moment. You've seen the market evolve from the early 2000s to this high-speed, AI-driven era we are in now in 2026. You've always had a massive focus on gold XAU-USD. It's a beast of an instrument, volatile, driven by global politics, and often moves with a mind of its own. For a trader trying to find their edge today, why gold? And more importantly, when the market is screaming and the volatility is at its peak, how do you keep your students focused on market structure instead of getting swept up in the noise of the news or the panic of the candles? Is there a specific anchor you teach them to look for when the charts start moving fast?
I love trading gold, and for everyone listening, that's all you really need. You can focus on just one pair and still be highly successful. There are firms that trade only gold, yet many retail traders try to trade everything. I do trade 5 major Forex pairs as well, but gold is my main focus. When you're starting out, I'd strongly recommend sticking to one pair. Get to know its behavior, understand market structure, and learn where the majority of traders place their stop losses, because at first, you're one of them. Always step back and look at the bigger picture. Be aware of major news events, but don't let random volatility shake you out of your trades. If that's happening, your stop losses are likely too tight.
That is such a vital takeaway. The shiny object syndrome kills more accounts than the market ever could. If you know where the liquidity sits and where the herd is placing their stops, you aren't gambling anymore, you're hunting. You are looking at the big picture while everyone else is squinting at a 1-minute candle. I want to lean into that big picture philosophy you just mentioned. You've been in this game for over 2 decades. You've seen the rise of algorithmic trading, high-frequency bots, and now the integration of AI into almost every system. As someone who is actively using AI to build business systems and automate the boring parts of life, how do you see the role of the human trader changing? If the numbers don't lie, and bots can crunch numbers faster than we can, what is the one human edge that an AI will never be able to replicate in the market? Is it intuition, grit, or something else entirely?
AI can process data and execute trades far faster than any human ever could. But let's be real. If you bought gold 2 years ago and simply held it, you'd already be sitting on strong profits. You don't need a bot to tell you that. For day traders, it's also possible to identify winners and losers relatively quickly, depending on the time frames you trade. Higher time frames give you more space to think, react, and adjust according to your rules. The real edge comes from combining both. Humans plus AI is a powerful mix. We have to admit, on our own, we're slow. But when you use a bot to handle data, alerts, or execution support, you put yourself one step ahead of traders who rely purely on manual decisions.
We've covered the psychology, the tech, and the focus. Now I want to get into the nitty-gritty of the daily battle. You've mentioned that trading is a business, and every business has a product. In Forex, our product is our decision-making. But after 20 years, you know that your brain isn't at 100% every single day. Some days you wake up, and the fog is there. Maybe you didn't sleep well, or there's stress at home. In your Find Your Edge community, do you teach a red light, green light system for the trader themselves? Specifically, how do you know when not to trade? Is there a personal audit you do before you even open your laptop to make sure you aren't about to give back a week's worth of profits just because you are having a human day?
We need to develop rules. Just like we have strategy rules, we need personal rules that keep us disciplined. I follow 3 core rules, and if they're not met, I don't take the trade. No matter how I feel, whether it's a bad day or anything else, if the rules aren't there, you stay out of the market. The truth is, the market won't give you opportunities every day. Over time, you learn patience, you learn to wait. And when it comes to things like a bad day or lack of sleep, that's your signal to step away. You're not meant to trade every day. That's something I've even built into my app. You can track your days off and understand how rest impacts your performance.
I love that you've actually built a day-off tracker into FX Playbook Pro. It's almost like an athlete tracking their recovery days. In trading, rest is a productive activity because it preserves your mental capital. You mentioned you have 3 specific rules that must be met before you enter. Without giving away all the secret sauce of your mentorship, I want to talk about the patience it takes to follow them. We see a lot of FOMO, fear of missing out in the markets, especially with gold when it starts a massive run. How do you handle the psychological itch when you see XAU USD moving 200 pips without you because your 3 rules weren't perfectly aligned? Do you view that missed move as a loss of opportunity, or do you view the discipline of staying out as a win for your long-term equity curve? How do you get a student to stop feeling left behind by the market?
As a trader, I wish I could catch every move, but that's not reality. You can't have them all. What 20 years in the markets teaches you is this: opportunities always come back. Instead of chasing moves, a professional waits for a retracement before looking to enter. Just because a move has already happened doesn't mean the market is done. There can still be more upside or downside, but the key is patience. Most traders get this wrong. They see a 200 pip move and assume it's over. Not necessarily. Markets move in structure, higher highs and lower lows. When price pulls back, that's your chance to re-enter with a clear plan, instead of chasing at the worst possible time.
Opportunities will happen again. That is the mantra of a veteran. It's the difference between a scarcity mindset and an abundance mindset. You know the market isn't a train you're about to miss. It's a revolving door that never stops spinning. That is a perspective that only comes with time, the realization that the market is an infinite stream of opportunities. You are describing the retrace as the second chance for the disciplined trader. while the amateurs are chasing the top of a 200 pip move and getting trapped when it pulls back. You're sitting there calmly waiting for the market to come to you at a better price. You mentioned the higher highs and lower lows. You are talking about the fundamental heartbeat of market structure. Let's talk about the trap for a second. We often see fakeouts where the market makes a new high, everyone jumps in, and then it reverses instantly. In your 20 years of experience, how do you distinguish between a true structural shift, a real change in trend, and just a liquidity grab, the market hunting for those stop losses you mentioned earlier? When you are looking at gold, is there a specific tell or a confirmation you wait for to make sure you aren't the one being hunted?
Looking at the bigger picture filters out a lot of fakeouts. Smaller timeframes will always have more noise, but if you understand your weekly and monthly direction, you'll know which setups to ignore. You're trading with the trend, not against it. That said, no matter the context, fake out or valid setup, your edge comes from cutting losses quickly. Know your stop loss before you enter the trade, and if it gets hit, you're out. No adjustments, no moving stops, no convincing yourself you might be right. Simple rule, once your stop is hit, the trade is done.
You are done. That is the ultimate line in the sand. It's the difference between a trader and a gambler. The gambler negotiates with the market, while the trader accepts the market's verdict immediately. Note: that is the coldest, most necessary truth in this business. The moment you move that stop loss, you stopped being a trader and started being a victim. You're teaching people that the exit is just as important as the entry, if not more so. By looking at the weekly and monthly big picture, you're essentially using the higher time frames as a filter to wash away the noise. You're trading with the tide rather than fighting the waves. Let's talk about the emotional fatigue of being a pro. You've been doing this for 20 years. Even with rules, even with the big picture, the market is a psychological grind. When you have a string of 3 or 4 correct losses, meaning you followed your rules perfectly, but the market just didn't go your way, how do you maintain the high-end mindset for the 5th trade? How do you prevent revenge trading from creeping in after you've been cut out quickly 4 times in a row? Do you have a specific ritual or a reset you use to keep your head clear?
Let me be honest. I've been trading for 20 years, and even with strict rules in place, you're still human. Emotions don't disappear. You deal with them constantly. Yes, I've broken my own rules before. It's an ongoing battle, even after 2 decades in the markets. It's especially hard for new traders, but with experience, it does get easier, not because emotions go away, but because you understand them better. You learn that revenge trading doesn't work. FOMO isn't real. The only thing that is real is protecting your capital and knowing when to withdraw. That comes from experience. Even recently, I took a week off after a bad loss. Losses don't disappear just because you've been trading for years. The difference is how you respond to them. Emotions are always there. From when I started to now, that hasn't changed. What has changed is my ability to control them. Trading itself is simple, almost boring. But most people fail because they can't manage their emotions. I'm proud to say I've operated at a level of the top 5% of traders, but let's be real. That doesn't mean every month is perfect. Emotions can creep in, you can slip, you can take 3 losses in a row. It happens. That's why you need your own way of dealing with it. Everyone is different. You can't just copy someone else's strategy and expect the same results. They might succeed with it, but you might not. Revenge is always there in the background, but I know where that leads. If I hit my weekly stop-loss limit, I'm done. No exceptions. I walk away. Taking a few days off, resetting and reviewing, that's powerful, and not enough traders do it. Less is more. When you step back, you start seeing the market differently. You need to have honest conversations with yourself. At the end of the day, it's just numbers. It's part of the business. Wins will come. They always do. But right now, you're being tested, and the key is to stick to your plan. Define your limits clearly, per trade, per week, per onth. Know when you stop. That has to be part of your system. For me, when I hit that limit, I'm out. No second guessing. I'll go for a walk. That's my circuit breaker.
I love that. Less is more. By walking away, you aren't quitting, you're reloading. You are giving your brain the space it needs to reset so that when you do come back, you aren't looking at the charts through the lens of needing to make money back. You are looking at them through the lens of opportunity. It's interesting that you mentioned a stop loss for the week. Most traders focus so much on the individual trade that they forget about the cumulative emotional weight of a bad week. If you lose $2,000 in a day, you might be okay. If you lose $10,000 over 4 days, your decision-making is naturally compromised. To close out this part of our conversation, I want to talk about that walk. When you're out there, away from the screens, and you're having that conversation with yourself, what are the specific words you use to remind yourself that wins will come? After 20 years, do you still have to remind yourself of your track record? Or is it more about looking at the trees in the sky and realizing that the market is just a small part of a much bigger, more beautiful life? How much does your identity as a father and a mentor help you keep that trading loss in perspective?
Wins always come. I know that from experience. And once you've truly felt what it's like to win consistently, you can't go back. That's why rewarding yourself matters. It reinforces that belief. But at the same time, you have to stay grounded and keep yourself in check. I often ask myself a simple question. Do I really want to give money away? Because if I keep pushing when I shouldn't, that's exactly what I'm doing. Over the years, experience has built a solid foundation in my trading, and there's a big difference between knowing something and experiencing it. Experience is what makes it real. The second part is just as important, enjoying life. There's more to life than sitting in front of a screen all day. Personally, I only spend real time on charts once a week, on Sunday, before the markets open. That's when I map everything out, what I expect, what scenarios could play out, and how I'll react. If A happens, I do this. If B happens, I do that. During the week, I keep it simple. I check the markets on my phone and execute trades from there. That's it. Some weeks I'll focus on just one pair, like gold or JPY-USD, because I know where the best opportunity is. Other times I might trade both, but often one is enough. Here's the small secret. You only need one good trade a week.
You only need one good trade for the week. If every retail trader tattooed that on their wrist, the success rate in this industry would skyrocket. That is the ultimate shift from worker to predator. You aren't clocking in for 40 hours. You are waiting for the one high-probability moment. That is a powerful way to look at it. You've moved the battlefield from the screen to the strategy. By doing your heavy lifting on Sunday, creating your if A then B scenarios, you've already made your decisions before the candles even start moving. You aren't trading during the week, you're just executing a plan you already wrote. I love the visual of you executing from a phone and then getting back to your life. It proves that the 20 years of grind was for a purpose. Freedom. You aren't a slave to the flickering lights anymore. To bring us home on this episode, you mentioned that one good trade can be the highest return for your money. You're looking for quality over quantity. For the people listening who are currently staring at their screens for 10 hours a day, feeling exhausted and frustrated, what is the very first thing they should do tomorrow morning to start moving toward your simple and boring lifestyle? Should they delete their apps, change their pair list, or is it time for them to finally sit down and write that if-then plan for just one pair?
Be honest with yourself. What do you actually want out of trading? And more importantly, can you do this for the long term? Can it realistically become part of your everyday life? Next, ask yourself, is your trading as simple as 1, 2, 3? If it's not, you need to go back to the drawing board. Simplicity is everything in this game. Take indicators as an example. Are you using too many? Personally, I use none. My approach is pure price action. It gives me an edge because I only need a couple of key things from the market to know what to do and when to execute. You should also be able to continue living your life while trading. If you're glued to the screen all day, something is off. Most likely, you're over-leveraged or overcomplicating things. And finally, enjoy it. You have to enjoy trading. That's the only way you'll last in this game.
Simple as 1, 2, 3. That is the perfect note to end on. If you can't explain your strategy to a 10-year-old, it's probably too complex to survive a high-pressure market. I think that's the most important audit a trader can perform. If your screen looks like a flight cockpit with 20 different indicators screaming at you, you aren't trading, you are just drowning in noise. You've stripped it down to the essentials, price action, and a life lived away from the desk. You've given us a lot to think about today, from the law of large numbers to the founder's coin, and the raw honesty that even after 20 years, the human element never fully disappears. It's about the discipline to walk away and the wisdom to know that the market will be there tomorrow. It's been an absolute privilege having you on the show. You've shown us that finding your edge isn't about finding a magic formula. It's about finding the discipline to stay simple, stay patient, and stay human. Before we hop off the air, do you have any final words for the tribe out there listening?
Yes, I do. I hope this episode inspires aspiring traders. The real reason I made it was to help you get to know me, who I am as a trader, why I founded Find Your Edge, and to show you what realistic goals look like, and what it truly takes to succeed in this game. There are a lot of gurus out there, all with their own stories. But my message is simple. Don't expect easy money, and don't expect an easy journey. Trading is deeper than anything I can cover in one episode. If you want to learn more, join me in the community. Like I always say, no trader gets left behind.